Subscribe to our YouTube channel and press the bell icon to never miss any update from Samco.
Hi, I am Anuragh and today I will tell you about the latest IPO of CAMS Limited. CAMS is looking to raise about Rs 2,244 crore through an offer for sale of about 18 crore shares, which comes from a 37% divestment from NSE Investments. The issue opens on 21st September and closes on 23rd September. The price band has been set at Rs 1,229 to Rs 1,230 per share for a lot size of 12 shares. CAMS is currently the largest mutual fund RTA company in India with a 70% market share in a more or less duopoly market. The company services 4 out of the top 5 mutual funds and 9 out of the top 15 mutual funds, showing its dominance in the industry. Its service suite includes tech-enabled services such as transaction origination interface, transaction execution, payment, settlement and reconciliation among others, which are provided to not only mutual funds but also to insurance companies, AIFs, banks and NBFCs. Moving on to the industry tailwinds, CAMS generates about 80% of its revenues from the fast-growing mutual fund industry, which has grown from about Rs 13.5 trillion to Rs 27 trillion over the last 5 years. The company derives its largest revenue from the equity segment of mutual funds, which has also seen a rise in market share from 31% in 2016 to 42% in 2020 and is expected to grow further. Both these factors contribute to rise in revenues and in turn lead to margin growth for the company if the costs are under control. The company also operates in an industry with high entry barriers and commands a dominant position with a 70% market share. CAMS has been able to grow consistently over the years and remains an undisputed leader. Now coming to the financials, the company has seen stable revenue and profit growth, with improving margins that drive PAT to a higher rate of 8% CAGR against revenue growth of 4% CAGR from 2018 to 2020. This serves as a positive for the company. Its operating margins have also been excellent at an average of 35% over the last 3 years, driven by strong operational efficiency. A negative working capital serves as another plus point for its operations. With an asset-light model, CAMS has delivered healthy returns to its shareholders. In FY20, it delivered an ROE of 32.1%, while its average in the past 3 years is around 31.4%. The company has also reported a strong ROCE of 34.6% in FY20, with average ROCE of 34.4% over the same period. But there are a few risks which investors should keep in mind. The company generates a large part of its mutual fund revenue from paper-based transactions, but as AMCs move towards a more digitized solution, these revenues are expected to be impacted over time. The business model of the company is such that as AUMs rise, the charges levied to AMCs tend to fall. This results in the company seeing a handicapped growth in revenue versus growth in AUM. The impact can also be seen as the revenue growth has been lower than growth in AUM in the past. Mutual funds are the largest drivers of revenue for CAMS, indicating high concentration to this segment. Any risks impacting the mutual fund industry will also impact CAMS negatively. In conclusion, the company is valued at a PE of 35 times, which values it at a premium. Though the PE is higher, it is justified given the company has a dominant market share in an industry with high barriers to entry, strong financials, and a clean balance sheet. Hence, we recommend investors to subscribe to this IPO for listing gains. Thank you.